All right. Hello, everybody, and welcome to our event today. I'm really glad everybody can make it to the webinar because today we're going to be doing something we've never done before. We've actually got a special guest with us. We have a commercial lender with us that's going to be walking through and talking about exactly why business loans are getting rejected. And she's also going to be sharing her secrets of what causes these denials and how you can actually use this information to get approved for loans and credit lines. Look, the bottom line is there's a lot of things that happen in banking that we just don't know on the front end. We don't know how these lenders are making these kind of lending decisions. And as a result of that, then when you go in to apply for loans and credit lines, you're at a significant disadvantage. And we're going to fix that today. We're going to make sure you have the insider information the lenders have that are making these decisions so you can craft everything that you need on that application the way that it reflects that your business is credible, fundable, which will help you get a lot more financing. So about me, a little bit about me, and then we'll introduce our special guest. We'll talk a little bit more about the topics we're going to be diving into today. So for those that don't know me, my name is Ty Crandall. I've been in the finance industry for going on about 18 years now. I speak about the topics of business credit and financing worldwide. I'm in Sarasota, Florida right now. I'm in Dallas, Texas later this week. So I really travel quite a few places to talk about what we're talking about today. I've actually authored two of the best-selling books on these topics of credit and financing, Perfect Credit and Business Credit Decoded. I'm also seen as a business credit authority on news stations, podcasts, radio, TVs. I've been featured in Inc. Entrepreneur in Forbes. Our company was just actually recognized as one of the top entrepreneurial companies in the country last year per Entrepreneur magazine, and I actually have the blessing of overseeing the largest business credit partner division in the United States. So what that means to you is it means that not only do I talk about the stuff, but we actually help thousands of partners offer business credit and financing, and we teach them everything they need to know to be able to do so. So I don't tell you any of this to brag. I'm an extremely humble person for anybody that knows me. I just tell you this because I want you to know that I have the background and I have the to be able to share the information with you today. On the personal side, look, I live in Florida. I love it down here. Spent a lot of time with my family at Disney, and whether we're doing something in the sky, in the ocean, or I'm doing something really fun with my kids, I try to make the absolute most of living down here in this beautiful place that I do. And with us today is also, for the first time, a very special guest. So with us today is Megan Christensen. Now, Megan has about 16 years in the finance industry. Her and I have been doing this for a very, very long time. She's a business credit expert and creditor and creator of the business credit building program, the original. I mean, there's if you look out there at the very few sources for business credit companies out there and the technology they use, the content and information was in large part created by her. I mean, she was one of the original founders, really, of business credit education. And I think a lot of people think that's me. She's the person that actually teaches me. She's the guru that has taught me most of what I know about business credit building. On top of that, she's also an award-winning speaker and an instructor. Okay, she instructs all around the country, and I know it's because she goes to Hawaii on these difficult trips sometimes as well. So she goes out and talks about this all over the country, is put on stages in front of thousands of people, and she's actually the premier speaker at the top real estate training event in the country as well. And she's also the COO here at Credit Suisse. She's actually my business partner. So like I said, a lot of people try to give me credit for what happens here at Credit Suisse, and actually she's the one that does the vast majority of the things that make us successful here at Credit Suisse. While I get to get out and get all the recognition, well, she's the one actually doing a lot of things behind the scenes. So let me see here, Megan, and on the other side of Megan, I'll let you talk a little bit about this, Megan. So Megan, welcome to the webinar.
Hey, thank you. And I wanted to actually hear how you'd explain my hobbies. I thought that would be fun, but I'll give it a whirl. Thank you for the intro, and I'm so excited to be here. It's a joy getting to work with you, Ty. It's a blast and never boring, which is one of the best parts. So a little bit about me, like Ty, I don't sit still well. You can imagine what our meetings are like. There's a lot of moving and standing going on, but I am an avid dirt bike rider. I totally enjoy that. And I don't know if you're able to make the screens progress. Yes. I speak all over the country. Last year, I spoke over 25 times. I was in places like New York City, right downtown, from Hawaii, like Ty said, that one was hard, and Florida and everywhere in between. That's a great picture of our team. We have over 70 team members at this time, and I would say it's one of the largest joys of my life, the ability to work with these brilliant people. Let's see. There's our great team right there again. I took them on an adventure. There's me with my family. I love adventures and taking them on top of mountains, going wake surfing with them and showing others how to wake surf and so on. So that's a little about me and what I like to do. There we are doing a little racetrack and me speaking at one of my events. So I'm just excited to be here, and I love business credit. I'm excited about this topic today.
Right, and I'm excited that you're here, Megan. And just so you guys know, Megan, tell them a little bit about your experience. You can't talk about the bank that you worked at. I'll give everybody a hint that there's like a stagecoach related to the bank, but that's all I can say. But tell them a little bit about your experience in commercial banking.
Yeah, unfortunately, that stagecoach has had a rough time lately, but I'll tell you, I was a good banker. I was not rogue. Yeah, so man, I was fairly young in the banking industry. I had a mentor that really believed in me, and I was so thankful for him because he propelled my career in a way that I don't think it would have propelled without him. As a younger uh, person right out of college, I had the opportunity to do commercial financing and do construction loans. And that was a great foundation. From there, I proceeded into small business lending. I was able to, because of the connections that I had, I'm trying to be modest here, not sound like, but I was able to fund more loans than any other lender in the United States. I had the opportunity to go up on stage and get lots of rewards. And it really came back to that I loved working with the business owners, and they referred their friends to me. And it created this wonderful network of business owners, and I was able to help them. I loved it. And I always talk about one of my skills is just being persistent and being annoying. And one of the things that really contributed to that success, getting all those business owners financing, et cetera, was asking a lot of questions. So when an underwriter would tell me no, I never took that no for an answer. I wanted to understand why. But it's important to understand that in banking, there's a reason they keep the lenders separate from the underwriters. In fact, they don't even give us their phone number. And the reason for that is because of people like me, right? That really wants to understand, why was my customer declined? What can I do to help them get approved, et cetera? But because of banking regulation, et cetera, it's a fine road to walk on, and you have to make sure you're not allowed to tell them exactly why they were declined or what they could fix, but I can give them tips and tricks, to get them along the way. So anyway, I'll try and get through this story more quickly, but that was my background. At some point, I did have to finally step back, and I realized if I wanted to really be true to who I am and the impact I wanted to have, that I would need to leave that very comfortable career in banking, including, 401ks and so on, and start my own consulting business and take what I was trying to do to a different level to really help business owners. So that's how I found myself here today.
That's awesome. Thanks, Megan. So, guys, as you guys heard, I mean, one of the top bankers in the country for business loans. And you've already kind of got some of the insight of what we're going to be diving into today. I mean, did you ever even know that the front end banker is not even allowed to communicate with the underwriter? These are the kind of secrets that you need to know, because I see a lot of people blaming the front end banker for the denial when they're not even involved in the process, which is part of the problem. So there's a lot of stuff we're going to be diving into today. We're going to be decoding this whole thing. And one of the things is we're going to be talking about why exactly these loans are denied. We're going to be looking at the stats. We're going to be looking at the facts. We're going to be talking about it's not what you think. Believe it or not, a lot of loans are denied not because you don't qualify. It's based because you don't meet the criteria that the lenders have. We're going to talk about 10. We're going to go through 10 specific insider secrets to get approved. We're going to talk about the exact things you could do through 10 steps to be able to make sure that you are as fundable as you possibly can. We're going to talk about how to best work to prevent a denial before you even apply. Look, that's the thing. The goal here is to teach you what it takes to get approved so you could should meet that criteria before you apply. There's none of us that like to go through a process of wanting to get money and not being able to get it. So we're going to figure that out today. We're also going to be talking about how business credit makes you more fundable. We're going to talk about how you could use business credit to get money for your business, but we're going to talk about the things that your banker's not telling you about how they're really secretly using business credit to make all kinds of lending decisions about you. And we're going to introduce you to a ton of a little known about funding options as well. So as time permits, and I'll ask you for permission today, if we have time, I'll show you the exact steps our clients take to actually get financing, to get loans, to get credit lines, to get business credit. So we'll be diving into that today as well. So look, let's address the obvious here. Most people that go to try to get financing do fail. That is the statistics. And a lot of it is because they're trying to go to their bank. They don't realize that there's these alternative funding options and there's all these other ways that they can get money beside the big conventional banks. So we're going to talk about that today so you know what all of your lending options are. A lot of people don't realize they can get funding based on their business credit, not their personal credit. They don't even know what business credit is or how to establish business credit. We're going to be talking about that stuff as well today so you have that insider advantage. And a lot of people don't know that there are always ways to increase their chances of success in getting a business loan. Look, you and I know this because when you apply for a credit card, you either get an automated approval or you get that message that you'll hear by mail in 7 to 10 days. So we know computers are making very fast decisions about us. The question is what are they looking at? What's the algorithm looking at to decide between an approval and denial? We're going to do that today because if we understand exactly what to feed the computer to get the approval, well, then we can get the approval that we're looking for. I'm not talking about fraud or anything illegal. I'm just saying there's certain things for your business setup, for your credibility, for your fundability that they're looking for, that a slight tweak or adjustment here or there is literally the difference between a denial and approval. So if you're looking to know if you're in the right place or not, because we're going to be spending about an hour and a half together here. The reality is that I have never done a webinar like this with a guest. We have more content than I think we can even go over in an hour and a half. So I'm going to move pretty quick. And if I want to make sure that if we're going to spend the time together, that you're in the right place. So if you are looking to get approved for financing, if you've ever been turned down for a bank loan, if you want to know why you've ever been turned down before, well, then this is exactly what we're going to be talking about. If you're just getting started in business, you want to have future success in getting business loans, or if you're just getting started in starting the process of trying to get financing, well, then we're going to be decoding that to make it easier when it comes time to get money. If you're interested in other ways to get money, you want to find all the ways to get all the access to capital you can, we're going to be talking about that today. And the bottom line is, look, if you're looking to get the most amount of money for your business at absolutely the best terms, we're going to be talking about that stuff today. We're going to talk about how banks determine the terms that you get and how to get the better rate, how to get the longer term to keep your payments lower. So let's talk a little about the chances of actually getting a business loan. So in a recent survey per NAV, they found about 45% of small business owners who are denied financing get turned down more than once. So we already see with the big banks that it's about 89% of big bank applications are denied. And this statistic's even worse. Now, when there are people are applying, they're trying to go somewhere else to get financing, and nearly half of them are then denied when they're going out there trying to get that second type of financing. So per a 2017 Federal Reserve Bank report with medium to high risk, about 65% of all applications to big banks were denied. Okay, and denials are increasing because it was up to 73% in November of 2018. That's pretty recent data. Okay, so about 3 out of 4 applications that get there are denied. They're not even initially approved. And keep in mind that an approval doesn't mean a funding, right? Even when the deal gets approved, it still has to go through that process to ever completely fund, right? And only a small percentage of those deals ever get to funding, but only 1 out of 4 even gets to a point where it gets the approval and moves down that funding process. Now, what's staggering about this is if you've ever applied for a loan at a big bank, there's a lot of documentation involved. I mean, these are the people that went in with applications completed and bank statements and tax returns and collateral and all this paperwork, and even then, 3 out of 4 of them were not able to secure a loan. And of the 1 out of 4, again, that only a fraction of those even funded. So a lot of reasons for loan denials here. So in 2016, a Fed report survey of over 10,000 small business owners showed that some of the reasons for denial were that there wasn't enough collateral to be able to offset the risk. Weak business performance, low credit score, insufficient credit history, okay, too much debt. But here's the question: what credit score are they looking for? What kind of credit history is insufficient? What is a weak versus a strong business performance? What are they looking at with your ability to repay and debt, not debt? And here's the crazy thing: a lot of these applications weren't even denied for any of these reasons. They were denied because the bank doesn't even think the application is legitimate in the beginning. So a lot of things that we have to dive into to make sure that we can get this fine-tuned for you within an hour and a half to make sure that you're more fundable. So how did small business owners make up the shortfalls? Well, about 76% of all firms with financial challenges use personal funds to fill that gap. Okay, about half took on additional debt, made late payments, and or downsized to fill the gap. But none of these are sustainable solutions. Look, the biggest problem that we see at Credit Suite is that business owners are trying to use their personal credit to fund their business. What happens is, I'm going to tell you two secrets about business. One, everything takes way longer than you think it will be to actually happen. Okay. If you think something's going to take 6 months, expect it 12 months. And secondly, it costs a lot more than you ever anticipate it will cost. So a lot of people get into business and they start thinking it's going to cost X amount of money. Then they put it on personal credit. They use personal funds. They blow that money, realize it's a substantially greater investment than they anticipated. And then they get themselves into a problem because they don't have access to the capital they actually need to be able to grow the business. And that's what all these statistics fund or support. So not getting funding can mean a business is going to fail. Okay, more than 4 out of 5 of all small businesses failures come from cash flow. That's insane. 4 out of 5, the reason that they fail is because of an inability to manage cash flow. Basically, they don't have access to the capital that they actually need to be able to handle their ongoing expenses. Nearly half fail because there's no market needed for their product or service, and over a quarter fail because the bottom line is they just run out of money. That's it. They just have no money. And the other ones kind of stay on there until an emergency happens or something unexpected, or they hit a bad month. And then all of a sudden that one thing completely knocks them out. Okay, so we're going to talk a little bit more about that. So the lenders are using a lot of information, and we're going to be bringing Megan, you into this as we dive into this, because this is the stuff you really need to know. It all comes down to where the lenders get their data. And you heard Megan's story, and her and I are here for the same reason. We just think it's ridiculous. We think it's ridiculous that all of this stuff is hidden behind this curtain that you don't know, where if you knew about all this stuff, then you could actually go in and you'd have the best chance of getting loans, and like lenders would be able to approve a lot more applications. It just makes sense to us. Okay, so what we want to do is bring the front end banker and the underwriter both up to you, the people that you're not able to see in the background. So part of this comes from knowing where these guys are getting their information, because they're gathering all this data about you and then making all these decisions of whether or not they're going to approve or deny your loan, the rates, the terms you'll pay, and it's all based on where they're getting this information. So they're checking this information from a variety of sources, okay? And they don't tell you about any of them, but knowing these really gives you the best chance of success, because knowing and understanding what matters most makes getting it a lot easier when it comes to getting financing, okay? Because you know what to improve first, and that's what it comes down to. If you know this is what they're looking for, okay? It's like a checklist, right? And I'm a pilot, so that works well for me because I adhere to checklists, and checklists allow us to like get in almost any airplane and fly it just because we have this list that we can execute. So it's exactly the same thing here. Okay, you have to know what to improve first. If you have a checklist of things that you must meet to get approved, it's much easier to meet that list of items and then get approved. It's really the difference between getting approved or getting denied for financing. So LexisNexis is one of these sources where a lot of lenders denying applications are getting your information, okay? So what's happening is LexisNexis is comparing information, or lenders are comparing information against a source like that LexisNexis against what's on your actual application when you apply. And then on top of that, if the application and the LexisNexis don't match, well, then oftentimes you're going to get denied. So Megan, just dive into this a little bit more. So, what I'm trying to explain is that, look, there's this place called LexisNexis, right? And they're one of the sources. And what's happening is lenders are getting their data from LexisNexis, and then they're using that data to then cross-check it against the application. What does this look like in the banking world?
Exactly. Well, it's in this room, right? That's basically this underwriter area that lenders, the front end bankers, don't really even get access to, nor is a front end banker even trained on what they're looking at. We just get these, prompts on the screen where we can see approved, declined, and here's the approved decline reasons that you can state, but we're going to not tell you exactly what contributed to that decline. So like, for instance, something I thought of as you were talking is it may say on there, unable to verify business. Well, what in the world does that mean? You know, that decline reason happens time and time again. And I bet a majority of the people on this webinar, if they've applied for any financing, they have seen that decline reason. But what does it mean? A lender's not able to tell you that. But what it means is in this verification, this back room where they're verifying the data. So usually when we get an application, it's put through in the system, and then the system has this automated process in which it's talking to the LexisNexis database, to it possibly FICO, is pulling FICO information, public records, etc. And if it doesn't match up, then they have a process that takes place. It could be a red flag, etc. So that's how that process works, just as you stated. Any
Okay,
other questions on that?
no, I want to talk a little bit more, because we're going to talk a little bit more about LexisNexis. I mean, what ultimately is happening here, guys, and this is one of the things that Megan, you could talk a little bit more about, is that a lot of loan applications aren't denied because you don't qualify. What's happening, guys, is that they think that there's a potential fraud. Megan just described it, where you put information on an application, it goes into this underwriting room, they're pulling information and aggregating data from a source like LexisNexis, and what they're basically doing is taking this LexisNexis data, they're comparing it against your application data to make sure that it all matches. And if it doesn't match, then what happens is they basically are kind of thinking, okay, this could be potential fraud because, you know, the information isn't 100% accurate. And then when that happens, as Megan's saying, they execute something at that point, which could trigger a manual underwrite, a deeper under. Go ahead, Megan.
Yes, and what's so interesting, oftentimes we just want to say bankers are evil, banks are bad, right? Because they deny us, and that feels terrible. But keep in mind that a majority, I'm not kidding, a majority, that's over 51% of the applications that banks get are fraudulent. Imagine that. If you had a friend that punched you in the arm every time you saw them, how do you react when you see them again? That's how the bank feels. So a majority of the apps they're getting are fraudulent. So their first check is to make sure your business is real. And they're using this LexisNexis data to verify that.
Yeah, and LexisNexis basically has this proprietary linking technology that what it basically does, it connects all the data that pertains to you, both positive and negative, that they have access to. So think of it like this, and this is something that a lot of people believe it's not accurate. You may think you have a credit report at TransUnion, Equifax, and Experian, but you don't have a credit report at TransUnion. They don't have a credit report on you. What happens is they aggregate data. Think of it, data just floating around in this vast space. And then when somebody pulls a credit report from you, what they do is they take all the data they believe pertains to you, they pull it all in to one report, and then there's your report. So you don't have a report. At any given time, they're pulling data they believe belongs to you when somebody wants the report and pull it onto a report. That's how credit reporting really works. And that's exactly what happens here with LexisNexis. They take all this data that's floating around and they pull it into a report and then give it to these lenders that are making these decisions. Now, this is criminal and traffic records. It's information on every place that you've ever lived in your life. And it's your every email address you've ever owned, every phone number that you've ever had, every mortgage you've ever held. Okay, not just your mortgage. I mean, if you've never pulled the LexisNexis credit report, you should, because what happens with LexisNexis, it will not only say every home address you've ever had, it says the building materials of your home, the square footage of your home, the number of bathrooms, what the roof is made of, whether it's central heat and air. I mean, the information is down to the most insane detail on these reports. The insurance, every insurance policy you've ever had, okay, every license that you've ever had. Like, I'm a pilot, so my pilot's license is on there. My mortgage broker license is on there. If you're divorced, your divorce records, your marriage records are on there as well. So, I mean, it's all this information. So what they're doing is, if you think about what Megan's saying, okay, more than half of the applications that go to the bank are fraud. So what do? They pull all this data to try to compare what you're applying for against all this data that they know to try to catch you up. But the problem is if the spelling of your name and the business is different in LexisNexis than what it is with your application, or your email address is off, or these things don't match up, then that's the first thing that triggers these red flags of potential fraud. Okay, Megan, anything else you want to kind of speak to on that?
Yeah, just keep in mind how expensive that fraud is for the company, right? So if something doesn't match up, I often hear business owners say, well, won't somebody just manually look at it? If you think about the cost of that, it's astronomical. So oftentimes it's the system that has that initial call. And I have seen lots of business owners just get declined on that step alone.
Right. And this is one of the, and we've, just so you guys know, we partnered with LexisNexis. We partnered with LexisNexis to actually bring forward this year the first ever front-facing consumer credit score. Because we went to LexisNexis and said, look, we don't think this is fair. Like, your data is being used for all these decisions, and like the people don't even know that. Like, we want them to see your data. And they said, we want them to see our data too. No one's come to us with this before. So we partnered with LexisNexis to bring this stuff to you in what we calling a fundability score, which I'm not going to say it's free or not, but that's what we're trying to make happen. So it brings this data, this transparency to you guys, so you can see what they're seeing, because we believe that that's so important. We'll talk to you about clients and how clients access that stuff a little bit down the road. But again, this just becomes so important because this is where these guys are getting their data from, and that data is what's being used to make all these kind of lending decisions about you. So another place is the Small Business Financial Exchange, SBFE. Now, they're a nonprofit entity gathering data on small business. What they are is they're called a third-party data aggregator. Okay, so they're basically aggregating tons of data about you, okay, and then using it for what it's called as its members. Okay, now members are lenders. Okay, so members are banks, lenders. They are the owners of this nonprofit. They are the members. It is theirs. It is owned amongst the members. Okay, and this is probably one of the biggest secrets you guys really need to know about. So the data is then used to compile all this credit information about you. So think about it. There's this whole data warehouse. It's owned by all these banks. The banks basically are getting all this information about you, your loan performance, the information that you're filling out on your loan application, every piece of data that they have, they're supplying to this. And then they're basically using the information, as you can imagine, for all kinds of lending decisions. So it's banks' way. It's like their secret boys club, right? They're fist bumping each other. And what they're doing is taking all the data, and you don't know you're filling out an application at one bank. You don't know that all the other banks you're going to apply with are seeing all that information, because it's all being shared in this secret warehouse that's happening behind the scenes. This is what is referred to as a data warehouse. So it's a huge secret data warehouse with what's called a give to get model. It's pretty simple. If you want to be part of this, then you have to basically be willing to give all the information you have about your borrowers. Okay, if you're willing to give that information, then that means you can get the information. That includes payment history, and it includes any other information they have, including application data. Okay, and then again, in return, they are able to get that data. So it's in their best interest to provide all the information they can get, so they can get as much information back in return, right? So basically what's happening is this is extremely thorough, because the members all have a huge benefit. If they give all the information that they have, they know that others banks or members are going to give all the information they have. So it's this secret boys club behind the scenes that's going on, where they're exchanging all this data about you that you don't know. And this is where all these congruencies come in. You fill out one application, you said your revenue was this. You fill out another one, you said your revenue was that. You fill out this application, and you know what? The spelling of your name is one letter off, or your EIN's one number off, or any of these things that trigger all of these other alerts that are happening. So Megan, SBFE, what's kind of your take?
Yeah, I mean, you're right. It really does feel like a boys club, but think about it from the bank's perspective. See, this is where I'm a banker, huh? Imagine protecting yourself if you're a lender from those that submit an application one place, tweak a couple numbers, go to another place, or somebody that's trying to commit fraud. It really prevents that scenario. Where a business owner is getting tripped up is they think, oh, I'll submit an application here and then I'll inflate my revenue, or I'll fix the issue that occurred on the first app with the other bank, and the bank realizes and knows that you've already applied at this other bank and you submitted completely different information.
Right.
And that business owner just keeps running into brick walls. That means you don't get multiple chances in most situations. You
Right.
you really get one chance to do it extremely well.
And a couple points to that. One of them is, as Megan said, and anybody that follows knows that I am big on, look, the banks are not bad people. What they're trying to do is, you have to understand that their intentions are pure with what they're trying to prevent. And in this case, what they're trying to do is prevent fraud. That's what it really comes down to. And when we started to talk to banks about our relationship with LexisNexis, what they said is they started freaking out and said, this is fantastic. If we could get pre-screened applications, this would be huge for us. And so that goes to tell you that they're not trying to deny these applications. They're trying to screen out the fraudulent ones versus the 51% that are fraudulent. They're trying to get rid of those so they can get to the 49% that are. So if they had a way to pre-screen and everything came into them clean, that's what they really want. But the problem is, you don't want to get hit in the crossfire and get your loan denied because they think it's fraudulent just because your information doesn't add up. So that's why it's important to know. The other point is again, when you go in and put the information on the application to get denied, it's not like you can learn from your mistake and go apply somewhere else with different information or with modification or tweaks. This is why this webinar is so important. You must know this up front, because once you fill out that application data, you put it into a system where all that data is being shared. It's not like you get another shot. So you need to know this stuff going up front, because once you do that and put that information out there, all these other banks are going to see it, and it can cause a ton of other issues if you're not familiar with this information. So again, this is where the credit reporting agencies and LexisNexis get their information from the SBFE. And this thorough information covers a vast array of information about you, as we talked about. All the information is in every business application you've ever made is there. And if there are any discrepancies, well, then as we just talked about, that's really what causes your loan to get denied. So again, lenders are using this information to cross-check it against your application data. They're looking to see if the criteria that is the same. They're looking to make sure that it's not fraudulent. They're looking to make sure that on top of it, that you're meeting the criteria that you must meet. They want to determine if your claim on your application jibes with their records, okay? And they want to know if it's likely that your business is going to fail. So they're looking for risk. But the funny thing is, we're pretty far into this webinar. We haven't even talked about risk yet. We haven't talked about your revenue. We haven't talked about what banks really look at, because the crazy thing is, most applications aren't even denied because you didn't qualify. It's because of this ridiculous little details that people are just overlooking. Then they start looking at your likelihood to pay. And that's the main thing banks are looking at for qualification. How likely are you to repay them? It's the only real factor they care about. Once they get past the fraud, most of the applications just get denied and eaten up in the fraud. So let's talk a little bit about this 10 secrets that you need to know to get approved. So first of all, you guys, we talked about, you got to keep your records consistent, right? LexisNexis, SBFE, they're looking at everything as we just talked about. So it's better. So it's had a better match. I mean, you've got to get denied. You don't want to get denied because of fraud if your information doesn't match. So you've got to make sure that you've got this congruency in everything you do. You need to know when you fill out one application that information can be seen by other lenders, okay? Because that's how lenders are interpreting these inconsistencies. What they're looking for in all of this data is inconsistencies, because, right, people that lie make mistakes. So what they're doing, and this is the same thing as detectives, right? They ask the same question 3, 4, 5 different ways at different times in an interrogation, because what they're trying to do is get the person to slip up, because people that lie make mistakes. So the same thing here. They're looking for fraud. So these inconsistencies is really what they're looking for, because those are mistakes that people committing fraud make. Okay. And again, this is a cause of denials, which is completely not even in your hands, right? I mean, it really just comes down to not having your information be congruent. So this means your business name, your business address, your business phone number, everything must look the same in these places and more. So it must be consistent in your IRS records, your business credit reports with DMB, with Experian, with Equifax, on your licenses and your incorporation papers, okay? Copy and paste the information. I mean, just make sure it's all the same. So we had an application denied with Staples the other day, and the person got turned down, and it specifically said that there was a phone number mismatch. Now that's a lucky customer, because the reality is he was told exactly why he got denied and got a chance to fix it. Okay, but the reality is that in most cases that application, think about it, that's insane. His Staples credit card for $20,000 got denied, not because he doesn't have revenue, not because he doesn't have the trade lines. He had everything he needed to qualify, but the phone number that they got from their database, probably from SBFE, okay, didn't match what he had on the application, and that one factor got him denied for a $20,000 credit card. So that happens all the time with these loans and with these credit cards. And it's just a matter of making sure that this information is absolutely congruent. So, and Megan, anything else that you want to touch upon on the need and importance of congruency on SBFE, on LexisNexis, on all of this stuff ties together?
Yeah, and the funny thing, so this is our world, right? Ty, you and I know this and we live it, and but we're also both entrepreneurs. And for better or worse, we just don't sit still. It's a blast being an entrepreneur. And oftentimes those mismatches are just, we're moving way too fast. We don't have time to keep all these records in order. And in all reality, we would hope that they would get to know us, right? That they'd spend that time with us, etc. Personally, it's just not the case. So I just wanted to bring that up, especially for a business owner, this understanding why most businesses get decline. This may be a shocker to them at this point, going, wait, I thought it was going to be like revenue or debt to income ratios or this magic number. And really a majority are getting declined at this first fraudulent step. And that's usually something new that a business owner learns as they go through our program at this place.
And this is why on our system for our clients, this is step one. And I can't tell you how many of our clients turn around, they come in with denials, we fix stuff in step one, they turn around to the exact same source and get approved. It was never because they didn't qualify. It was just because of these inconsistencies. And this is why I just drill this home again and again. It drives Megan and I crazy because there's so many people that could access loans and credit lines and credit cards, and they're getting denied because of these small discrepancies, which could easily be fixed. So definitely a great secret one to start with. Now, secret two to avoid denials, again, is to make sure that you're building that legitimate fundable business. Okay, so you need to have a professional website and a professional email address. You want to stay away from Gmail type email addresses, for example. Now, website, they're not going to verify you have a website when you get a business credit card, but you don't ever want to leave that field blank, or that throws up a red flag. When it comes to a lot of loans, they are going to look at your website. They are going to make sure that it reflects what you do and that it reflects what you're putting on the application. So don't go in and claim you're in one industry and then they go to your website and see you're in another. So again, they're looking for consistency here. They're looking for professionalism. You want a toll-free business phone number. You want to get a fax number. The bottom line, you just don't want to leave application fields blank. If it asks for a fax number, have a fax number. May you need it? Maybe so. Maybe you won't. But nowadays, it makes you look more professional if you have a fax number. So fax numbers stop being used. So have that. Same with toll-free numbers. Most businesses that do business, unless it's out of within a local area, like a pizza shop, almost everybody else has a toll-free number. They're so cheap. $10, 15, 20, $30 to get, depending on the source. So do it. It makes you look a lot more credible than just using a local phone number. Get the phone number listed with 411. This is one of the basic criteria that vendors and credit issuers and lenders are looking at, because you can't list your own business. You can't go to 411 and list your own business. They have to organically pick you up. So I'm going to teach you later. I'll show you how you can actually get your phone number listed with 411 easily with a click of a button for free. But again, this is not something you could do at 411.com, which is why lenders and credit issuers have such an issue. You want to have a real business address, not a P.O. box, not a UPS address. Now, you could use a home address, but again, some sources like Walmart probably aren't going to approve you. And now Dun & Bradstreet is including Google Street Views of your business location on a lot of credit reports. So if you don't want a picture of your home on your business credit report for lenders to see, you may want to consider a real physical address or a virtual address. And a little bit later, I'll talk to you a little bit more about virtual addresses as time permits. I'll even show you some of the sources that our clients use for virtual addresses as well, because it's a great alternative solution if you don't need a physical address. Get all necessary licenses that you need for your business as well. That becomes very important. And also, making sure that you're even starting up and setting up your business the right way and not choosing a name that's high risk. And I'm not sure if I'll dive into that later, but I will show you a list later of high risk industries so you can avoid those as well, because the name has a lot to do with it. So secret 3 to avoid denials. Let's get your EIN and more. Go to the IRS website. Megan, so far, anything else that you want to chime in with on the two things we've talked about, the fundability? I think we already talked about congruency.
We did. We talked about congruency. I would say a lot of business owners try and use a PO box. You've already hit on that because they don't have a physical business location. Just a reminder that a PO box is really scary to a bank. It would basically be like a stranger coming up to you and saying, hey, I want financing, and then you ask them either where they live or where their business is, and then they don't tell you, they give you a PO box. That just doesn't even sit well in real life, let alone on a credit application. So I just wanted to kind of give that perspective from a lender's point of view. If you're getting a PO box, I don't know where you're doing business, and that makes me nervous.
Perfect. And Megan, so in your experience, it's even better to use a home address, because at least if you're using a home address, like, you know where the
Yes,
business is.
exactly. I would much rather have you give me a home address because that feels a lot more comfortable than some random PO box. It PO box feels like you're hiding. That's basically an automatic red flag when I get an application with a PO box.
Okay, guys, so this is why you're here, right? I mean, you just have a commercial lender tell you flat out that you're better off to use a home address on an application than go to the UPS store and use an address that some people will convince you to believe looks like a real physical business address when it doesn't. So you're better off to literally go in there and use a home address to have a better chance of getting approved than a PO box and a UPS address. So the next step in secret 3, you want to go to the IRS website, get that EIN number. Okay, now you're going to have to choose your entity first with the Secretary of State. When you do that, you're going to want to avoid high-risk names, which I'll show you some of that later. But once you get that entity set up, you're going to want to choose an EIN. Okay, you get that free from the IRS. Now, when you set up the entity, you want to choose a corporation or an LLC. Okay, and now again, any entity could build business credit. You could build a business with any entity, but you want to choose an LLC or a corporation for really a couple reasons. First of all, those, you and the business are separate from each other. So if you're a sole proprietor or you're a partnership, you are the business. If the business gets sued, you can get sued. Now, I'm not an attorney and that's not legal advice, but that is the reality. So you want to try to choose an entity that separates this liability. And again, if you come in and choose a corporation or LLC, you do so. Another reason is that sole proprietors have a 1 in 7 chance of getting audited by the IRS, and a corporation has a 1 in 50 chance of getting audited with the IRS. So significantly better chance of avoiding IRS audits if you're choosing corporation as well. So consider that. If you're going to choose a sole proprietor, if you're going to completely ignore my advice and that of pretty much every accountant, then at least get a DBA. So the name that you're putting out in the space for your business isn't your own personal name. So that becomes important. Okay, this is also where you're going to need to choose the right SIC code, NAICS code. These codes spell out if you're in a high-risk industry. So if more than one code can apply to your business, well, then use that one. And again, I'm going to show you a list of high-risk industries later that you'll know to avoid. If we have time, I'll dive into that. So Megan, anything else that you want to touch on that?
I have so many stories, Ty, as we go through these items, but one that sticks out to me at this point is I had a customer apply for financing and they submitted a code that said they did employment services, but their website was obviously construction. They were a construction company. And when I confronted them about this, they told me that their accountant, get this, told them to say they were an employee service so that they would have a higher chance of getting financing. Banks hate those inconsistencies. Everything needs to align.
Sure. I mean, think about that, guys. Think about how it makes you look. You just look like a liar. Like if you were literally going to go to a bank and lie about what you do, well, then what else on the application would you be willing to lie about? So
Yeah, it was
that
pretty
makes
much an automatic decline.
sure. Yeah.
So, yeah.
So
Yeah.
you don't want to choose an SIC that's not an industry you're in. But here's the deal: when we look at business credit reports, we often see 3, 4, 5, 7 SIC codes on there because there's a many different industries that could apply. So what Megan and I learned early on in the company was we figured out. We said this is our industry SIC code, and this is the SIC code we use everywhere on applications, on tax returns, and that's helped us. Even when the bureaus had a different SIC code, we corrected it. I went to Experience. That's wrong. Here's the SIC code. And they said, oh, no, I'm sorry. Information didn't come from us. And I sent everything. I sent LexisNexis. I sent like everything we had to them. I said, well, it didn't come from any of these sources either because they got it all right. And so they changed it. So again, knowing right from the beginning the ones to choose that are really relative to your industry and then going in on that and making sure that it's not reflecting your high risk becomes important. And we'll talk a little bit about that and show you some examples of high risk industries. So secret number 4 to avoid denials is get your business identification number. So perhaps the most important or well-known of these is the DUNS number. Okay, this is basically how your business gets set up with Dun & Bradstreet. It's not a step you're going to want to skip. So you can go to D&B's website and do this, and they'll send it to you typically in a few weeks. You're going to need to have your DUNS number, and 3 payment experiences with Dun & Bradstreet in order for you to actually have a Paydex score, which is the most popular business credit score in the business world. Now, a couple things. One, later, I'm going to show you how to do this. The DUNS number, Dun & Bradstreet, will try to charge you about $1,500 a year for. I'm going to show you later, as time permits, how to get the DUNS number without paying for it. Okay, and I'll also show you how to get the 3 payment experiences, because you got to have both to get a Paydex score. We need to get a Paydex score. That's what makes you lendable. So I'm going to talk to you and show you later how to get the DUNS number as time permits, and I'll ask for your permission so we can do that. And then also, I'm going to show you how to get the 3 payment experiences. But you're going to want to get this DUNS number from Dun & Bradstreet, and I'll show you later how to do that without paying for it, so you're not paying that $1,500. Megan, and also get your BIN number from Experian. That's the business identification number, and that's something that's something they call Biz Source with Experian applies. And I'll show you later how to get your BIN's number easily for free as well. Megan, anything you want to hit on with DUNS and BIN?
No, again, very important. It's additional data that lenders are looking for, and it's so important that that information is congruent, that it all matches your Secretary of State record, and that it matches the information on your application.
And guys, we had a client that was interesting, because what happened was I actually went through the process. They actually applied for Staples and got denied for business credit card. And Staples never asked for the DUNS number. And so, but they got denied because of insufficient business credit history. This person supplied the DUNS number to Staples, and Staples immediately turned around and approved them. So what happened was they had a hard time finding the business based on the information the business had provided. The minute they found the DUNS, they were able to pull the DUNS, pull the proper business credit history, and approve the business. So I often suggest to clients, look, you give them the DUNS number even if you don't have it, because it really, in that instance, is one of many examples that we see where having that information is the difference between getting approved and getting denied. And by the way, everybody, I know you guys have questions, so there's a couple things I usually reference at the beginning. I didn't. My apology. For one, if you're staying to the end, you don't have to stay to the question and answer. But if you stay to the end, we will send you a copy of this webinar tomorrow. You will get a playback and a copy of this. Secondly, Megan, if there's anything in the questions that I should attend to right now, let me know. Otherwise, guys, Megan and I are going to hang out. We're going to get through all the content for everybody that wants the information. Then we're going to hang out in the end and answer the questions, as many questions as we can. Okay, so if you have questions, I'm not going to ignore them. It's just we have so much information. I'm going to wait to the end. And then, Megan, if there's anything important that comes up in those questions, just let me know. So secret number 5. I appreciate it. Build business credit. So business credit, again, we're talking about credit that's in a business name. Okay, this shows how well a company is equipped to even pay back loans. Okay, so a poor or non-existent business credit profile, well, that's not a very good thing. That's going to cause a lot of problems. As a matter of fact, Experian and Equifax will give you a failing business credit score. Okay, and that would make you as high a risk as you can get for filing bankruptcy per the score they have to indicate that, because you have no credit. This is the one world, it's not like consumer credit. In the commercial world, the fact that you have no credit makes you inherently very risky by default. So the expectation is that your business starts to build credit very quickly. And when your business doesn't do that, then what happens is they automatically start to ding your credit. And then it makes it more difficult for you to come in and get the financing you're really looking to get. Now, a lot of reasons you want to build business credit. I mean, one, it doesn't have any impact on personal credit, doesn't adversely affect your credit scores. So you're able to get credit cards, for example, without giving your personal guarantee or personal credit check. So there's no inquiries on those credit reports, right? So not only is there's no inquiries, there's no credit reporting on those credit reports either, because utilization, the percentage of high credit limits you're using, accounts for 30% of your credit score on the personal side. So what happens is with business credit, this credit's reporting to the business credit reporting agencies, not the personal. So it won't adversely affect your credit because there's no inquiries on your personal credit to get it, and the credit's not reporting on your personal credit report. So you could max the credit out and it won't adversely affect your utilization either. Now, something else cool related to credit is that there's no credit pull here. So I'm going to show you, as time permits, how our clients build business credit, and I'll walk through it pretty quick here. But what's nice about business credit building is that it's not based on consumer credit quality, because if you do it the right way, and I'll show you later how to do it the right way, then there is no consumer credit check whatsoever to get approved. There's also no personal guarantee. You're not personally liable for what happens with that credit. Now, none of us as entrepreneurs expect to fail. I'm somebody that I owned a mortgage company when the whole mortgage industry collapsed. I lost it all. Okay. And I can tell you from personal experience, what happened in my world was that the little money that we had left, because they lowered all of what happened was we messed up these 2 things that I just went over. So we got business credit cards that reported on personal credit report. When we started to go late on those because the business started to fail, what we never anticipated was that every one of our consumer credit card companies lowered our limits to what we owed. So we thought we had $100,000 plus in available credit. It all went away immediately. Since our limits now became what we owed, our credit scores plummeted. Our ability to get credit, use credit for anything else was ruined. Then one more punch in the gut, because we guaranteed everything, they literally came and took the money, extracted the money from our personal bank accounts to pay the business debts. That's how the whole thing went down. And when it was all left, I'm like, okay, that was pretty bad. They wiped out my credit, took out my limits, took all my cash, and it was all because I made these mistakes. So this stuff becomes very important, and business credit helps you avoid it, which is why I talk about it as much as I do now. Business credit building is very fast, okay? You can start getting credit immediately. I'll show you later how to do this, okay, as time permits, and within about 4 to 6 months time, you can complete the entire process, which is important because it's your credibility. Anybody can see your business credit reports, okay? Plus, it gives you double the borrowing ability, right? You have consumer and you have commercial credit. The limits on this is way higher than consumer credit, about 10 to 100 times higher than consumer credit. And the nice thing is, even if you can't get any kind of bank loan, you're still able to get approved for this kind of credit, as long as you have a business in the United States. You could do this for multiple businesses. You could do it as a nonprofit. You don't even have to buy these fake trade lines, shelf corporations, or any of this stuff to be able to succeed. And as we mentioned, business credit quality determines if you're going to get approved for a loan, how much you'll get approved for, and the rates and the terms you'll pay. Now, as I mentioned before, you can be given a failing business credit score, as you see here, even when you have no credit. So here's an example of somebody that's about as high a risk as you can get, and they have absolutely no credit reporting. There's nothing on the credit report. Now, just so you know, this is called a current financial stability risk score. A financial stability risk score, it is designed to literally depict your risk of business failure in the next 12 months. That's what the score is. So on a 0 to 100, with 100 being the highest and 0 being the lowest, this person has a 6. About as low as you can get, high risk as you can get, with no credit reporting. Now, here's the great news. The great news is that when you do what I'm talking about here in building business credit, even one account turns that around. So you can see here that here's somebody that had that 28 score, top right image. Then they got one account added, which you see here right to the image to the left that I'm highlighting. And then that one account took them from in the 20s to the 90s. Okay, they were able to go to a 96 score. Now you see there's a lower risk as they can get because they added one account to the business credit reports. And if you want to know why this is possible, it's possible because your business credit scores are primarily based on how you pay your bills. So the goal here is to get credit that reports on your business credit reports, pay the bills as agreed, and then by doing so, that's what gives you a good score. And then as you can see here, as you continue to grow, this is the key. So you can see 28 score here, $1,000 recommendation and credit. See that? We already looked at that. Then we looked at this 96 score, and we see that $2,500 recommendation credit. We start to see it climb. Here's somebody with a $6,900 recommendation of credit. Look, they have 2 accounts on their business credit reports. Here's somebody with 3 accounts, and they're being recommended for nearly $16,000 in credit. Here's somebody with 4 accounts, 1, 2, 3, 4, being recommended for nearly $66,000 in credit. Here's somebody with about 15 accounts that's being recommended for nearly $750,000. So what I'm showing you here is the more business credit you build, the higher the recommendations from the bureaus that you should be lent. So a lot of people don't know this. Lenders and credit issuers are making these lending decisions based on what the credit bureaus are telling them, a recommendation of credit you should get. And the more credit you get on those business credit reports, as you can see here, the higher those amounts climb. Megan, I'm trying to get caught up here because I think I'm a little bit behind, but any insight on this?
You're doing amazing. So much good information in there. I want to dissect it all, but I'm resisting that urge, right? Most business owners are completely unaware that they have business credit reports, right? So everybody on this webinar is now officially a step further than the majority, and lenders are absolutely looking at this data, and it comes into play. It may get you better terms. It may increase your chances for financing. One of my favorite stories ever is I was working as a commercial lender in Texas. Yes, lots of spurs and cowboy boots took place. And I banked one of the biggest ranchers in the whole area. And you can imagine that area smelled great. And, this rancher, and he was the top rancher, came in and he wanted financing. He wanted to help his daughter get a business credit card. So I put forward the application, and I unfortunately had to decline him. And because I was annoying and I asked the underwriting department why, is because one of his suppliers had reported something negative on his business credit report. He was completely unaware of its existence. He generated over 20 million in gross sales a year, and that's why he got declined for a $10,000 business credit card. So I love business credit. I think it's so important we all understand that business credit reports exist and the power they have.
So true. So look, guys, no business credit, it's really tough to get loans. It's that simple. Without business credit, a lender just doesn't have any idea that you can pay your debts. Okay, so they're very cautious. I mean, think about it. The way I explain it is that business credit is important to you and your business as consumer credit is to you as a consumer. Maybe you can get some things without consumer credit, but at some point, the bigger things you need, you're going to have it. And it's exactly the same thing in the business world as well. So we're going to drive through this process really quick. You're basically going to start with vendors. Okay, then they'll extend you credit initially, the others won't. Then you pay that credit. They put the credit on the business credit reports. You pay the bill, they report it to the reporting agencies. You get about 5 of these accounts or more. Then you move on to retail credit, Home Depot, Walmart, Sam's Club, Costco, etc. With about 8 to 10 accounts, you can get like fleet credit cards, Costco, Chevron, BP, Sunoco, to buy fuel, repair vehicles. About 14 accounts, and these numbers fluctuate. I mean, every month, every source changes. Sometimes every week sources change. But at 14 accounts, you can get the Visa card, the MasterCard. And again, I know I'm going through this pretty quick because I know right now I'm behind schedule. But what I'm going to do is, as time permits, and with your permission, I'll just physically show you. Instead of conceptually talk to you about it, I'll physically show you how our clients actually do this. I think it'll be a better run through as well. And here's the results from one of our clients who's now secured over $1 million in business credit, so you can get an idea. This is her credit without the personal guarantee and credit check. So you can see, Amazon, Exxon, BP, Apple, Shell. She actually got 165,000, I think, with Ford. Now she's up to. She got one credit line for 300,000 the other day. So we've got webinars on our YouTube channel with Christine, and our clients get access to a lot more of clients with these kind of results. And you can see some screenshots of her even holding what she calls, quote unquote, a few of her business credit cards and some of her credit limits and things like that you're seeing on her business credit reports as well. So a lot of clients with really good results. It just comes from actually getting credit you're actually going to use and use it. So will this work for you? Well, it works for anybody, regardless of cash flow, credit, and collateral, as long as you have a business. And here's just a look at 4,000, 10,000, JCPenney, Staples, credit cards. There's Amazon. There's just so many approvals. And if you go or part of our Facebook group at all, you'll see I see these, I don't know, 10, sometimes 20 of these kind of approvals a day. 17,000 at Amazon here. Here's a bunch more approvals as well. Here's somebody that got $50,000 at Flying J. Okay, so again, these are the kind of business credit approvals you're able to get when you build corporate credit. Here's a $9,000 Amex credit card, and on and on and on. Okay, I mean, over this webinar, I'll probably go over 100 real examples. Here's one of our clients too. We went to our bank to get a line of credit, and they turned us down. We got started with Credit Suite, set up our business credibly, and built our business credit. After following the steps, we've now secured over 96,000 of business credit cards and just applied for the Platinum Amex and just got approved instantly with no limit. Now we have 4 to 5 different companies call us every day trying to give us money, and that's a really good problem to have. We're excited that if you don't have business credit yet, you should get involved with Credit Suite to have the same results. So this is a sample. They have a really interesting story I may tell you about later as time permits, but they actually had their perfect example. They came in, they got denied for that loan. And what happened was we found an inconsistency with their business name was not listed on their Secretary of State records the same as it was on their application. They fixed the one inconsistency, turned around and got approved for that loan. One inconsistency because their name was spelled different on the Secretary of State record. So an example of exactly what happens when you turn that around. So number 6, you want to monitor your business credit reports. You got to know what's happening. So you need to monitor those business credit reports for any problems. You want to make sure that you're monitoring with Dun & Bradstreet, Experian, Equifax, maybe even Credit Safe as well. Credit Safe is big overseas, especially in the UK, and they're starting to make it over here. So they're one of the ones that you're going to want to monitor as well. Now, next, you want to make sure that you're getting approved with fundability, okay? So with this, I mean, you got to make sure that you've got one of the 3 C's. And I call this the 3 C's of lending formula. If you want to get loans, if you want to get financing for your business, and remember, you don't need business credit for this, but you've got to have this cash flow, credit, or collateral. That's the 3 C's. You got to have one of these 3. So let's talk about the one. If you have consistent cash flow, well, then you can use that to qualify for business financing. Okay. Alternative lenders, credit lines, PayPal and Square loans, all this stuff becomes available. Like if you've been in business 3 months or more, there are credit lines with no credit check available. There are PayPal loans. There are Square loans available. When you get in business 6 months or more, merchant cash advance start to become available. 12 months or more, you start to get these cash flow revenue financing. This is money that's available that's just based on consistent cash flow. Just the fact that you have regular cash flow gives you the advantage. Now, as we move on, and I think this is number 8, not number 9, but good personal credit also opens up the door as well. You can get up to 150,000 with business credit building. So you could build your business credit at the same time you're using your consumer credit to get credit cards that report to the business credit reporting agencies, basically. So you're getting up to 150,000 in credit lines if you have good credit or a good credit guarantor, okay? And you're able to get limits of about 5 times the amount of what your current limits are now, 0% rates for 6 to 18 months. So even as a startup, even as a nonprofit, regardless of industry, you can use the C of the CAT 3Cs formula, the credit, and you could use good credit of you or a guarantor to get up to 150,000 in credit lines that you can use to build business credit and fund the business. And you can take the physical cash out on these credit lines. So that's a huge lender secret that works for you, again, even if you are in a startup industry, okay? And the third C is collateral. So if you have some kind of collateral, well, then you can get financing as well. Maybe it's account receivable, so your customers pay you payments, or purchase orders. Maybe it's equipment financing or sales or lease back, or maybe you're borrowing against equipment you already own. Maybe it's inventory financing. Maybe you're getting commercial real estate financing or flipping homes. You can get financing for that. 401k, stocks, IRAs, bonds, book a business for insurance agent. All these kind of programs. The bottom line is, commercial vehicles. There's commercial vehicle financing out there. Do you have some kind of asset that can be used as collateral to offset the lender's risk? So think of it like this. All the lender cares about is whether you're going to pay them or not. And they're going to look at cash flow, things like that. If they don't have tax returns and these things that make them feel warm and fuzzy, well, then they go, okay, we don't feel warm and fuzzy. Do you have something to offset our risk? If you have something to offset the risk, you could typically get rates even lower than SBA loans, like 1%, 2%, 3, 4, 5% financing using collateral. So that is a huge tip there, to be able to use that to be able to get financing. And then really secret number 10 is to make sure that you can graduate to better loans. Okay. So if you have good credit and cash flow, well, then you can start to qualify for longer term loans. So now your loan term gets longer, your interest rates get lower, which means you can get more money at cheaper. So I'll give you an example. And this isn't the final graduation, but we see SBA loan approvals at 325, 350,000 with payments of like 4,000 a month. But we also see the more expensive merchant cash advances where somebody only gets $75,000 and has payments of $9,000 a month. So you want to get longer term and lower rates, because that's what's going to give you the absolute cheaper payment. So with good credit and cash flow, you can get both of those. And when you have all three, cash flow, credit, and collateral, that's when you graduate to the final tier of SBA loans. And this is what we help our clients do. Understand what it takes to get to tier to get as quickly as possible to SBA, because SBA loans are like 10-year loans, 8% rates. That's where you get hundreds of thousands of dollars with payments under $4,000 a month. Okay, but it all comes down to having all three of those if you would want that. So I'm going to go ahead now, and I have a little bit of time. So I am running. I'm not running behind. I'm right on track. I think I've got about, I think I can still get this done in about 30 minutes. So I want to ask everybody, and Megan, you monitor the questions and tell me. We still have some time. There's a lot of stuff I told you I would show you if I have time, and I have time. So if you're okay, are you guys okay if I might go a little over past 6:30. We might go 6:35 if I show you this, but type in yes into the questions. And Megan, just tell me if people are okay with this. If you're okay with me kind of taking the next step, I want to show you the actual physical financing that's available. I want to show you how our clients actually build business credit. And then in doing so, I want to show you a lot of the stuff I talked about, how to get the phone number listed with 411 and the industry, high risk, and all those other things that will help you get more money, not just in theory per slides, but how our clients are actually doing it. So Megan, is there people?
I've got Michael, Bonnie, Joy.
Okay, cool.
Let's see, Misty, and they're saying yes, please. This
Okay,
is
cool.
golden. Yes, yes, yes.
All right, so let's do this. So I like, because I listen, I understand we're all entrepreneurs here, and I understand the value of your time. So I just wanted to make sure we make the use of it. So what I'm looking at here is a system called the Business Finance Suite. Just so everybody knows, this is our solution. This is our system to be able to help customers build business credit and get financing, and then also help our partners offer both as a service. Okay, so we'll start with business credit building. Now, I wanted to show you there's a lot of things we talked about here with building business credit that I think become important. And please excuse me, my internet connection is not the best. I'm actually in a hotel room here in Sarasota, so my might be running a little bit slow. So these are the steps that we talked about, right? We kind of gave an overview of business credit building and credibility and building that fundability and all these other things. So let me show you how this actually works. So remember, in step one, what we're doing here is we're building the credibility of the business. So you want to make sure, for example, that you avoid high-risk industries. You don't want to lie about your industry SIC code. You just need to know that there's a lot of SIC codes out there, and you want to choose the one that fits best. Now, you can see our finance suite's just short videos here, right? 3-minute videos, 5-minute videos that walk you through every step of the process. It just makes it easy. And our system's really simple too. If Spanish is your native language, you could literally come down here and change from English to Spanish and changes the entire system there as well. So it's really easy to navigate in your native language. So we come down here, you can see that you could set up your business and you could search Secretary of State records. You can also view restricted industry. So let's take a look. Now, this list changes all the time, but ammunition, bail bonds, check cashing, general contractors, mobile, and you can see some high-risk industries are automatic decline, and then some, again, come in here, and some aren't an automatically decline. Some of them just have stricter underwriting guidelines. But here's a look at some of those high-risk industries. So making sure you're avoiding the high-risk industries becomes very important when you choose that business name. Now, you also want to, again, have that physical business address or virtual address. And I told you I would show you some of the solutions we use. So one of the solutions that we use is Alliance Virtual Offices. Now, Alliance for us really is one of the most reliable when it comes to virtual addresses. And you can see here that for us, if you can come down, select your address, and then here's some of those: Da Vinci, Alliance, Regis. So we just make it easy to come through, get the information you need. But there's 3 sources that can get a virtual address. And, our clients are assisted with our business advisors. So what we find is that you're going to have a lot of questions along the way. And our business advisors, call our clients 5 times the first 5 days. They're helping through this entire process. Our goal on the first calls is to get through step 1, 2, and 3, get initial credit right away. And then what's nice is this step 1 is all the lendability stuff that we talked about, setting up that business entity. Okay, we also help with setting up the phone number, the fax number. Now, we use a service called List Yourself for the phone. Okay, and we spend, I think, about the average of like $30 a month for the service that we pay for our clients. And we do this because 411 listing is so important that what happens is a lot of people will actually come in and not do it. And it became so important that we just said, heck, we'll just pay for it for you. So we pay for that for our clients, but you should know. So if our clients want it and they say, yes, I want that phone number to be submitted 411, say yes and submit it. If you're not our client, then you can consider using List Yourself too. It's about $360 a year. And again, that's just not something our clients have to pay for, but it's something you can expect. Now, what happens if you don't use List Yourself? You have to organically wait for 411 to pick you up, which means eventually Google will list you, eventually Bing and Yahoo. And then when you're on those places, then eventually 411 will pick you up. It just takes more time. So I just gave you the shortcuts to expedite it. Set up your website, your email, your EIN, your licenses, all those things we talked about, we do in that fundability step. Now, remember, we talked about that next step of becoming fundable. You got to get set up with the reporting agencies, Dun & Bradstreet, Equifax, and Experian. And one of the first things you want to do is exactly what we do with our clients, which is, again, get the DUNS number with Dun & Bradstreet. We talked about that. Getting the Experian BIN number, the BIN number. Okay, and again, it's pretty simple here because we teach you how the scores work and the DUNS number, and in one click you can come through right here, boom, get your DUNS number. Okay, so it makes it easy to go through and get the DUNS number. Now you can go to Dun & Bradstreet, just know they're going to try to charge you about $1,500 for the DUNS number. Okay, so just know that you don't need it to activate your credit profile, but they will try to sell you that, so be aware that they will. Okay, and you can apply for your DUNS. Now again, you want to get set up with Experian and Equifax, but remember, Equifax and Experian are different. It becomes very important with them that you do a free check to see if they know you're set up now, because remember, they will give you a failing credit profile and score even if your business isn't set up with them. So what we do is we have our clients come in and just do a free search here to see if the business even exists and to also get that free BIN number. And you should do exactly the same thing. Now, if you pull your business credit reports and you have issues, you need to fix them because it's important. I didn't even talk about that as one of the 10 steps. Like, you need to fix inaccuracies on your business credit report. So make sure you do that. Now, Dun & Bradstreet in our video here walks through this as our clients can walk through the steps, and you can easily do it right here with all 3 reporting agencies. But if you're not using our system, just know Dun & Bradstreet has a service called iUpdate that you can do your disputing with, and Experian and Equifax, you can do it through your credit monitoring. Okay, now our advisors help our clients through this whole process, but if you're doing it on your own, that's how you're going to want to do it. You're going to want to use iUpdate. You're also going to want to go through Experian and Equifax. Remember, Experian and Equifax are important because they'll give you that failing report and score even if you don't have any negative items reporting. Now, remember, we talked about building vendor credit. That's the next step. So when it comes to building business credit, now you want to get initial credit, and this is where you start getting credit with all these kind of vendor sources. Now, you're not going to find a lot of these, and my Zoom is in, so they look a little weird because my thing is zoomed in. But again, you're not going to find a lot of these sources out in the world because we create our own vendors. And by that, I mean, we're so sick and tired of not finding vendors that our clients actually need that we went and started finding companies that are really reputable that had services our clients needed. We helped them get the ability to report. So our vendors sell t-shirts, they sell office supplies and printing services, they sell SEO services and website services and the stuff you really need to grow a business. So you're getting vendor credit for the stuff you really need anyways, which means you don't have to pay cash for it anymore. Like, you could immediately get credit for it. And then that credit helps you build initial business credit. Now, this is one of my favorites, is Quill. Now, here's just what we really do is we take years of business credit building and we condense it to months. So we take about usually a 2-year process and condense it to 4 or 6 months. And here, I'll tell you how we do it. I'll give you some of the insider secrets. Okay, and here's one of the ways. It's just we take the actual underwriting guidelines for every single source that you see here. We have relationships and a data team that all they do is work with every single source. We verify their underwriting guidelines. So think about it. What we're doing is basically finding out exactly what it takes to get approved, and then we tell you before you even apply. So then that way our clients just don't get denied. We find that majority of business credit building delays happen because you apply for credit and get denied. So our goal is to minimize or reduce or completely eliminate denials. And that happens by teaching you the actual underwriting guidelines before you apply. You can see here, this is in orange. The apply button only actually is highlighted when you can actually qualify, and this pre-qualified comes up. So it just helps you determine all the vendors you can qualify for. And we even teaching you who they report to. And this is very important because remember, I talked to you about how many payment experiences you need to be able to move to the next step. Well, one that reports to all 3 reporting agencies here, like Behalf does, is a lot more valuable than a Quill of the world that only reports here to D&B. So knowing where they report becomes important when you're building business credit, because you want to build business credit with as many of these as possible, which means the ones you get that report to the more reporting agencies, the greater advantage you have to build business credit faster and move amongst those tiers. Now, another one of the tips that I gave you was you want to monitor business credit reports. You want to monitor it with at least Dun & Bradstreet and Experian. Those are the main 2 ones that you're going to build business credit with, and Equifax is the 3rd one. Okay, so you need to set up credit monitoring with all the reporting agencies as well. Now, monitoring for the credit reporting agencies, Dun & Bradstreet charges $150. Experian charges $50 a month. Equifax is about $20. So for D&B and Experian, is $200 a month is what it costs. And I'll show you, and I'll talk to you later about how to get it for $24, because $24 is a lot cheaper than $200. And through our finance suite, you can actually access Dun & Bradstreet and Experian reports for only $24. So it saves you $190 a month. That saves you over $2,000 a year. But that's okay. Even if you're not using us, you can still go directly to the reporting agencies, D&B, Equifax, and Experian, who you want to go to here. And you want to go ahead and get credit monitoring set up. Don't do this until you've already obtained your first vendor accounts, used them, paid the bill, and you're waiting for them to report. That's when you know you're going to have credit, and that's when you actually want to pull those reports. And then our clients just continue through the steps to get any kind of revolving credit they get. You'll be able to do the same thing, right? So remember, once you get those initial accounts reported, then you can move on to retail credit. Here's some of the retail credit. Okay, and again, my thing is kind of zoomed in here. I'm not sure how to zoom it out to get it to 100. That was not what I wanted. Although it's not. I'm figuring it out. All right, so I'm going to leave my zoom like it is before I mess it up. But I'm anal, and these things are not lined up. That's because of my zoom, not because of the system. So there is advanced auto parts there. You can see, some of the ones you'll know, like Wawa and Ryder, Quick Check, 7-Eleven, Meijer. So all of them. Now you can see that we tell you which ones aren't recommended, it just means you don't qualify. You can't waste time trying to apply for ones you don't have enough trade lines reporting yet to qualify. So as you build your business credit, these become open, and I left them as not recommended so you can see. So Lowe's, Macy's, Staples, almost every major retailer is a WEX. Okay, Kanoko. So almost every major retailer offers this kind of business credit building without a personal guarantee and without a personal credit check. So at this point, like once you've established those initial reports and scores, then this really just becomes about whatever kind of credit you could possibly want. Like, I mean, any kind of credit, whether it's office supplies or Shell or Walmart. Here's Amazon and Walmart, Lowe's. I mean, almost every major retailer offers some kind of business credit. And then you're able to get to the Visa cards. Then you're able to get to the MasterCards. You're able to get to the auto vehicle financing. And that's the stuff that you really want. That's the Visa card for 20 grand. That's the car loan for 150 grand. This is the Visa cards, the MasterCards. This is all of this. This becomes available when you have, again, about 10 to 14 accounts reporting. And then, of course, there's a ton of accounts that don't report. Apple's one of those. So, like, it's still beneficial to have credit with Apple, right? Because it's Apple. But Apple's one of those, and Costco. These are, some of them change. And they move into this category where they don't report. But, hey, American Express, right? That's still an account you want to get. Ford Motor Vehicle Financing, still an account you want to get. So, Apple. So again, there's a lot of accounts that don't report that you're able to get. And then there's stuff that you may want to provide a personal guarantee for. Some people don't mind the personal guarantee if it means they can access more credit. So we have, I don't know, 100 plus sources in here, all kinds of banks and other credit issuers that a lot of people don't know about that are all available without with a personal guarantee as well. Okay, and of course, you're able to come through here, even see how much your business is worth. But with getting a business valuation, you're able to come in here and actually access all financing in one place as well. Okay, so if you are looking to get financing in one place, we have a finance team that can help you with that. And whether it be any of the financing we talked about that's based on credit, that's based on cash flow, that's based on collateral, this is one-stop shop. So what we find is that there's a lot of money out there for you in the lending space. The problem is most people just don't know how to get it. So because like one lender like On Deck only offers one kind of loan. And if you don't qualify for that one kind of loan, well, they don't offer anything else. They just deny you. So we pull together all these every legitimate fundable source in the business space into one place. And then our finance officers just help you qualify for all of it in one place. So I'm in an event right now, and that's what I'm helping a lot of people do is they're like, hey, I need 600 grand. I'm like, you're not going to get it from one source. Let's piece it together using these 4 sources and 4 loan programs, and we got your 600 grand. So that's a lot of what we're working on right now, and that's a part of what our finance suite does as well. And I don't have a bunch of time to show you this, but this is also a full partner system as well. So if you were wanting to come in and offer business credit and financing as a service, like a lot of loan brokers are our clients, and credit repair and accountants and attorneys, we have a step-by-step system here, as you can see, that actually teaches you how to offer business credit financing as a service. If that's what you're looking to do, so you're able to come in here and get the step-by-step training on business credit and financing and everything you need to know to offer it as a service. We'll even do all the selling and closing for you. If you would like us to do so, we do that. And then we have every resource probably that you could even legitimately think about, from articles and press releases, marketing flyers, ebooks, free reports, guides, and everything is professionally done. A year's worth of email content, for example, a year's worth of social media posts. Basically, it's like, I don't know, it's kind of like a franchise or like a business in a box, but it's kind of like a franchise without the franchise fee. Like, we take everything that's proven. We teach our partners every week the advertising that works, how to do everything from Facebook to Google to network marketing. And then here's all the materials that our partners get as well to kind of give you a look at some of those. So back to where we were, kind of gives you an idea. I'd like to, again, show you exactly what it's like, not just in theory, but that's exactly how our clients go through this. So here's one of our clients, Marlon. I was looking for a fast way to get money to grow my consumer credit business, and after failing to get approved for loans in several banks, I discovered Credit Suite. After getting initial vendor accounts, I continued applying and getting all types of credit. Now have over 100 business credit cards in my wallets, totaling over $1 million. Okay, that's not bad. The total available credit. I have fleet credit that I use for auto repairs and fuel. I have cash credit I use with most major banks, including Bank of America and Wells Fargo. I secured almost all this credit without a personal guarantee and credit check. I've been able to get loans with many sources, including PayPal and Cabbage, with low rates and loan amounts of over $100,000. Okay, so that gives you an idea of what's possible when you're building business credit, and if you're doing the things that Megan and I talked about during today's webinar. Okay, here's one of our other clients that got $417,000. The interesting case study here: he had serious credit issues and did not come to us for help. He came to us to shut down his business. He was shutting down his practice because he had a $417,000 IRS tax lien. Perfect example, could not get all the money he needed from one source. We said, we can help you. He said, I didn't come to you for help. I came to you for advice on shutting down the business. And we ended up getting him about $1.5 million when it was all said and done, patching together a lot of different types of financing. Not only did he not shut down the business, he opened up another practice. He expanded his practice. He even ran for Senate in his state as an independent. So one of many, a multitude of success stories. So look, you're watching this webinar on your phone, your tablet, your computer, because you're probably looking for the fastest way to get money and credit to grow your business. And more than likely, you've probably already struggled to get the money that you need at the best terms and haven't been able to find a solution. So you're leaving this with a bunch of great info that you didn't have before you came. And that's my ultimate goal. But look, if you're interested in really getting access to the most money, then you might be a good fit to work with us, to work with our finance suite, which you just saw, because with that, you're getting business credit for your EIN that's not linked to your social through the top selling business credit building system. Okay, we've done, I think, closing in on about 20,000 clients we've helped build business credit over the last few months alone. Okay, and get access to all funding in one place. Okay, we're one of only 3 sources in the country that pull together all sources of money in one place. So again, the bottom line is, if you ever want money, it brings all money into one place. So you never need to look again. You have a finance team that can help you with this, whether you do it in English or in Spanish. Now, our technology helps you meet these credibility requirements before you apply, so you become more fundable, right? We help set up your business name to avoid those high-risk SICs. We help you set up your business entity the right way to avoid liability and set up the EIN. We help you set up the business address the right way. One tweak, one wrong thing gets you denied. Okay, we heard from the samples. The samples, when they realized that they got denied from Walmart because they used a home address, they made a change, got approved. So that's a perfect example. They got a loan approved because they have an address discrepancy we fixed, and they got a credit card approved because of something they didn't know regarding their address that once changed, they got approved for more financing. We set up that phone number. We give you that 411 for free, which saves you $360 a year. We set up the email, the website. You get your licensing listings online. We check for your compliance. We're partnered with LexisNexis. Later this year, your information, we're going to cross-check against LexisNexis and tell you all the discrepancies so you know what needs to be fixed. You're able to set up your bank account, your merchant account. Okay, we actually set up and activate your credit profiles with all 3 reporting agencies. That's what Dun & Bradstreet charges you $1,500 for, to get your DUNS number and activate your credit profiles. I told you how you could get it. You get it by getting 3 accounts. If you get 3 of those vendor accounts, that will activate your D&B. If you get 1 with Experian and Equifax, that activates it. You can see for our clients, it's super simple to do because we say every source and who they report to. So you just pick the ones that report to the places that you want to report, and it's that easy. Okay, you can actually get access to the DUNS number as well. Okay, so we're getting your DUNS number. We're helping you get set up with Dun & Bradstreet to save that fee with them. We're helping you fix inaccuracies with all 3 business credit reports. So if you have anything that's negative, that's inaccurate on there, we're helping you through that process as well. We have the largest supply of vendors that exist, including a lot of custom ones. They're ones just for us. You're never going to see in forums and groups. Nobody knows about them because we created them, and that gives you SEO and website services and those kind of things as well. We're giving you the largest selection of retail credit. You saw it. I mean, it's Macy's is in there, Nordstrom is in there. It's hard to find retailers that aren't in our system because everyone that's available with or without a personal guarantee, we're putting in that system, which means if you're a trucker, you're able to get gas cards, fleet cards, everything you need to fuel and take care of the vehicles. If you're working in an office, you're getting Home Depot and you're getting Office Depot and Staples and Amazon and Walmart. If you're you're in the construction industry or you're out flipping homes, you're able to get Lowe's and Home Depot and Labor Ready. So no matter what your industry, you're able to get credit that you actually really need to use to grow the business. And these hard to find cash sources. People always come to us and they don't know where to go to get the Visa card, the MasterCard, the Amex card, the fleet credit card, the auto vehicle financing. So you're able to get all that. And remember, you're able to get all this without the personal guarantee. You're able to get all of this without the personal credit check as well. So you're able to get all this without either of those. Okay, now you're also able to get cash flow financing if you have the cash flow with no consumer credit requirements, asset-based financing with rates as low as 5%. Remember, unsecured financing, 0% rates up to 150,000. Private money, alternative SBA loans, venture capital, all in one place. Okay, and we give you a finance blueprint. What our finance officers do is help you determine all the money you can get now. Then we graduate you to term loans, lines of credit, even SBA loans, all the way through the process. And again, if you're interested in being a partner, well, it's like a franchisee without the hefty franchise fees. We give you every single resource you need to offer business credit financing as a service. I do exclusive webinars that people that are not clients never see. I've got 5 years worth of them. I do them every single week. Rarely will one of my team members step in and do one of my plays. It teaches you how to market, how to run a business. It's all business strategy stuff that nobody sees on the front end that I do. I've done 5 years, hundreds of secret webinars nobody knows about that teaches you everything about actually running a business, where I show you how we built Credit Suite from nothing to like an 8-figure business. I show you, walk you through the whole process, so you actually get to see how that works. 12 months of social media posts, videos, emails, webinars. I mean, everything you need: PowerPoints, articles, marketing flyers, social media posts, website, ebooks, press releases, basically every resource you could need to market and sell. You're getting, and you're able to earn money with funding, submit customers just for financing without selling anything first. You're able to monitor them on a client dashboard, and you're able to set up sales reps and monitor sales reps, and they have special training and they have special resources as well. You're able to get all kinds of specialized marketing and training to be able to offer financing. So look, I don't know if this makes sense. Like I said, you have two solutions. You could do this on your own. You have a lot of information that I've taught you today about becoming more lendable, accessing financing, accessing business credit as well. If you're interested in working with us, because we hung out together for an hour and a half, you'll see on our website that it's about 7,000 plus for our top plan to get started. But if you're interested in working with us, I'm going to make sure that you have something special that'll go through the end of the week. So this will be valid for you through Friday. You really have one of two options. Now, option one is that you get business credit financing. You're not interested in offering it as a service. You're somebody that's not even in an industry where it matters. You just want to get money for your business, work with our advisors, work with our finance team, get the $2,000 worth of credit monitoring discounts for free without paying not the credit monitoring for free, but save 90% on credit monitoring. And you save the $400 on 411 and the $1,500 with D&B. You just want to save all that money, and then you want to come in and build business credit and financing. We call this our core program, and it's normally $597. But for this webinar, you're only paying 7 payments of $497, or getting a discount of about 20% and paying one payment of $24.97. Now, option two is you want to offer business credit financing as a service. This is called our VIP program. And with this one, it's only $100 more. It's 7 payments of $597 or one payment of $34.97. Now, some important notes here. First of all, it's going to take you about 18 to 24 months to do this on your own. We have a group of about 20,000 people on Facebook, so we see real time how long it's taking people to do this on their own. It's going to take you about 2 years. With us, our average client is doing this in less than 6 months. So you have to decide how much 18 months worth of time, that money being in your hands faster, actually means to you. You got to figure that out. I mean, because I figure out if I had 18 months and I had that money in my hands 18 months faster, I know I could turn it into a multiple of 100x. You have to kind of ask yourself that question. The next thing is you also need to know you're going to be paying thousands more. You're going to maybe be paid Dun & Bradstreet $1,500. You're going to pay $400 for your 411 a year. You're going to pay thousands of dollars for valuations. But again, with us, all that stuff is covered. I'm going to show you here how to get credit monitoring at a huge discount. So you're able to even save over $2,000 on credit monitoring alone. Now, also, keep in mind, we'll customize a payment plan for you. Don't ever not start. If you want to work with us to help build business credit and get financing, then work with us. Talk to us. At least talk to us. We have packages that are not even available on our website that are super affordable that I haven't even talked about yet. So we will customize payment plans for you, and we have other products and we have other options that aren't even available on the website that you won't even know about unless we're on the phone and we talk to you about it. So don't let affordability be an issue. We have all different kinds of ways you can get financing without paying us a dime. If you just want to come to us and get financing, we'll help you with that. We'll even help you get financing to be able to build your business credit as well. Okay, so we can even help you get the financing for that. And then we also, again, as I mentioned, have other offsite options. So just give us a ring, 877-600-2487. If you go, look, Ty, I followed you, like you, want to work with your guys, but I don't have that kind of money. then give us a call, because we might be able to come to you with a perfect solution that you don't even know about that works absolutely with you. That one of the first questions our team's going to ask is, hey, what are you working with? What is your budget? Let's see what we have that may work with what you need. And again, nobody even has to pay us for financing. We'll help you with the financing without even paying a dime of money if all of that makes sense for you as well. And it's risk-free. We give you access to our finance suite. You're able to get username, password immediately. Our advisors are calling you. They're calling you 5 times the first 5 days. We're getting all your credibility and fundability stuff set up. We're getting you set up with the reporting agencies. We're helping you get approved with vendor credit. And our goal is to do that on call 1 if we can. Like, our goal is to get you actual approvals in call 1 and make you fundable, and then get you to our finance team to start talking about money as quickly as possible as well. So again, we're just that sure of it. We give you full access to everything and let you pay over 7 months, even when you're able to access everything, and we're doing a lot of servicing right from the beginning. Now, if you get started, you don't feel that what you got is worth every penny of what you paid, or that you'll be able to make the money back with the partner program, we'll cancel anytime within 30 days. Okay. 100% guarantee if you cancel within 30 days. I mean, look, we were rated one of the most entrepreneurial companies in America in 2018 by Entrepreneur Magazine. And you can go to creditsuite.com/credibility, and you'll see things like this. Here's our ranking with Entrepreneur Magazine. Okay, here's a ton of approvals. We have literally hundreds of approvals on our website. You'll see that we've got a 5-star rating with Trustpilot. Here's the kind of comments that people are writing. And this isn't just some fluke comments. There are hundreds of comments of people writing entire paragraphs about the experience they've had. On our website, you'll see So Tell Us too. Same thing, hundreds of reviews. You'll see 5 stars, you'll see 4 stars, you'll see what people think. You'll see A+ rating with the Better Business Bureau. We finally got our first complaint. Some lady that had bought in credit monitoring for $24 and asked us like for a refund, and we gave her the refund, but then she got upset and said that it took her that it was she paid for more months than she did. And we talked to her about it, and she realized she made a mistake and withdraw the complaint. But still, it wasn't even somebody that bought our finance suite from us. So we've never actually had a client that bought our finance suite, that bought our business credit builder, that's ever purchased from us, that's ever filed a complaint with the BBB or with any online organization. So we have an A+ rating there, and we have hundreds of testimonials on our website. You'll see tons of media to prove that we are more than credible. So again, once you complete the order form, you'll immediately receive login information, and then our team will probably call you in the morning. And then I want to make sure you have some bonuses as well. So first of all, I'm going to make sure you get 30 minutes on the phone with our business advisors. They're going to answer every single question you have to make sure that we get the fundability stuff that's important to you in the business credit building done on call 1. I'm going to give you 90 days for free, 90 days with D&B and Experian. Now, just so you know, if you go to them direct, that's $600 they will charge you for credit monitoring. If you're getting started as part of this webinar, it's free, 60 days, completely free. And then after that, it's only $24 a month. So not only will it save you nearly $2,000 a year, but it saves you $600 right away within the first 90 days. Okay, and you're also able to get a 28-page business valuation. This costs, I don't know, about $1,000 conservatively. Some people charge thousands. Tells you what your business is worth. Whether you want to know that in the future, you get that. And also, you're going to get a ready to publish book. It's my book. It's called Business Credit Decoded. So you're going to get that decoded. So if you are in financial services, if you are going to be a partner, it gives you a ton of credibility because you become a published author overnight. And so that's awesome. And then one more, which is if you're interested in real estate investing, how to invest in small apartments. So my buddy Lance wrote this book, and it's phenomenal. Loved it. And I said, man, would you like give a physical book to our clients? Would you do that? And he said, yes. And I thought that'd be cool. Not all of you are interested in this, but I felt it phenomenal read. So I wanted to go ahead and include that. And Lance was kind enough to include that as well. So again, you're getting your own finance suite, 24/7 access, concierge service with our business credit team, free DUNS number, D&B setup, saves you $1,500, largest supply of vendor sources, store credit, fleet credit. Okay, you're able to fix inaccuracies with all 3 reporting agencies, get auto vehicle financing without a personal guarantee, save $2,200 a year on credit monitoring, get interest rates as low as 2% on asset-based financing. You're able to get unsecured credit lines up to 150 grand as a startup. Okay, if you have the good credit qualify, our finance team works with you. We're saving you $400 to a 411. We're giving you the Visa cards, the MasterCards, the cash credit sources. And then again, with our partner program, we're basically giving you the equivalent of an entire franchise or business in a box with PowerPoints, articles, videos, press releases, everything you need to market, sell, offer business credit and financing as a service is all included in our partner program. And you're able to get 30 minutes with our advisors, 90 days, $600 worth of credit monitoring for free, a 28-page business valuation for free that's worth $1,000, ready to publish book, which is worth $700. I mean, how much time and energy are you going to spend writing your own book? And how to invest in apartments book as well, all as part of this. And again, if you don't think it's worth every penny, well, then you cancel anytime. And within 100% or within 30 days, we're going to give you 100% of your money back. So the website to go to is creditsuite.com/webinar. And I'm going to add that here to this final slide. And then Megan and I are going to jump in and we're going to answer any questions that you have. Creditsuite.com, and this is /webinar, and this link will be available through Friday, where you're able to then get those specials. And then Megan, are you cool? You're cool to hang out with and answer some questions here.
Of course I am. I've already worked through a lot of these questions, but I also think they're questions that others have, and so
Okay, cool.
I'm excited to go over them. I had one just come in from, do you want me to just dive right into the question?
Let's start with it, maybe however you want to do it, the oldest one first, but let's make sure we get as many of these questions answered as we possibly can.
Yeah, I just think this group has fabulous questions, so I'm excited to dig into them. Michael just posted, he said, what does a company get or register more than one SIC number? I think he's asking, can a company have more than one SIC number? Typically not. Typically you have one. And I know it's a little hard to pick one, but I recommend having one industry and you stick with that throughout the life of your business. Another question that I have had, a lot of questions on our pricing and getting slides. So definitely go to creditsuite.com/webinar, and our team rocks. So many of you have asked, hey, I already have a business entity. Can you guys help? Of course we can. And our team can really go through your current business and diagnose exactly what we can do for you. So I would call that phone number. I can see the guys, they're ready for those phone calls, and they can walk you through exactly what we can do for your business so you can decide if we're a good fit for you. Let's see, other questions I had are, okay, if I have something negative on my D&B report, can you guys help me? I think we are one of the greatest resources to help in this scenario. It's not like personal credit where you have these personal credit repair companies. Business credit is different than personal credit. That's one of the assumptions a lot of individuals have, is that they are the same, but they're completely different. So our program does walk you through how to fix those inaccuracies. Worst case scenario, remember, one of the benefits to business credit is you can incorporate another company, and we can walk you through that process.
Yeah, and to speak everybody through that really quick, guys, remember, the credit repair is possible in the consumer world because of a law called the Fair Credit Reporting Act. That law doesn't apply to businesses. And, what we find is that, the vast majority of people that we help go through the dispute process the right way, they're able to successfully remove accounts, because it's not like consumer credit where there's this whole industry around disputing. In the business world, there's so little disputing that takes place that we find that a lot of the bureaus will just delete those accounts that are disputed. So we find if you're doing it the right way, it is easier to get those items disputed and deleted.
Yeah, Lorenzo just posted a question. He said, what if I have a new LLC? Can we help him? And the answer to that, absolutely yes. I love working with established companies. It's also nice to consult with a new company, make sure all the records are in order from the very beginning. So that's part of why I love what we do. We're able to help established companies and new companies, so no barriers there. Let's see. Everybody wants to know where Credit Suite is located, Ty.
We're located in two places. I actually am down here in Tampa, Florida. This is our original corporate headquarters down here, and a lot of our sales guys, our finance team operates down here with me out of this office. Megan operates out of our Liberty Lake, Washington office. We couldn't decide. She said no warm, I said no cold. So
We went polar opposites.
we went polar opposites, which if you knew is you'd understand why that's so funny. So that's so Megan's up there in Liberty Wake, and in there is a lot of our billing team and our support team and our advisors, our partner success team. They're in our Liberty Lake, Washington, and we still have people that are virtual. You know, our company started as virtual, and we talk about this on the training webinars because that saves money and some things you should do in the early. So we still have some team members that are virtual, but a lot of our team houses one of our 2 offices.
Ty, I'm watching it snow right now. What can you see out your window?
I'm seeing palm trees, Megan. That's what I'm looking at.
Just because it's 10 degrees. So rub it in. Too funny. Yeah, Credit Suite's located in those 2 main locations, and our team just rocks. A lot of people have posted, which sales rep is best, which one should I talk with, and I'm biased, obviously, but I think they're all amazing. Okay, I've got another question in here. I'm looking to get started in real estate, but I have little to no capital. How can Credit Suite help me get started?
Well, first of all, what you should do is you should check out our podcast. And this is long and lengthy, and I hope you find this okay. But if you go to creditsuite.com/the business credit and financing show, I know there's a dash between every one of those words as well. It's creditsuite.com/the business credit and financing show. Or just go to iTunes or go to creditsuite.com and click on the iTunes link. Check out our podcast. We have so many cool people on there that talk about different ways you can invest in real estate with absolutely zero money down, that they all have some really unique solutions, whether it's land, whether it's real estate, whether it's commercial, whether it's apartments. I've had all these guys on the podcast. The second thing is that we do a lot to help you get financing for that world. So some of the financing we do is we help people get business credit. We help people get unsecured business financing, the 0% credit lines, liquidate that, use that to buy property. They're using Home Depot, Lowe's type credit cards to do the fix part of the fix and flip. And then once they do that a couple times, we're able to get them what's called house reseller financing, which is financing specifically for fix and flips. As a matter of fact, I just had a guy on my podcast the other day that he is one of our sources and helps people get real hard money that literally does not even look at your consumer credit. It just looks at the property. So that's some of the ways. There's a lot of ways we help real estate investors get financing, but the show will help you. And again, those are some of the actual financing programs we have that can help as well.
All right, thank you. There's a couple comments in there that they want to hear from me. I just got a little bit more. I just got to throw that out there because it's
listen,
funny.
I don't blame them because I talk too much. I mean, we both know that. That's no secret.
I'm totally messing with you. All right, let's see. What do we have next? What if you have a DMV number as well as an EIN number? Can you still help me get started? I'm just totally new and starting my business.
Megan, I'm letting you answer all questions because I've taken up.
Now we've made him bashful. Okay, here we go. So absolutely. A lot of business owners come to us in this state, right? Here's the thing. We're all entrepreneurial and it's awesome, but starting a business is not easy and it's hard to keep all those ducks in a row and to know exactly what you need. So some customers feel hesitant because they're like, what if I did this wrong? What if I don't have everything together? And I would say call our team. We'll walk you through exactly what we can do. Having a DUNS number and an EIN number, but no entity yet, that's totally something we can work with. It's a scenario that we see all the time. How many people can I work with if they become a partner? And how much can I charge? Ty, do you want to talk about that one?
Sure. There's really no restriction to how many people you can work with. We have 2 different ways you could do it. The white label, which a lot of our partners have abandoned because it's kind of like, working at, Foot Locker selling Nike shoes, but trying to do so under the Foot Locker brand instead of Nike, right? So a lot of our clients are choosing to either have us sell, to do the selling and closing for them, or they're using our name. Hey, I'm a Credit Suite partner, or there's sometimes you have the ability to do white label and even put your own branding on there as well. As a price, you see our website, our core program, as you just saw, is $3,000. The cheapest we really go with that almost ever is like $2,500. You as a partner, we recommend you sell the finance suite for $2,500 to $3,500. That's what our average partner sells it for. Your hard cost, your wholesale cost is $500 to $700, depending on whether you're buying in bulk or one unit. So our average partner is earning about $2,000 in profit per sale. And of course, again, per FTC disclosures, that fluctuates based on what you charge, but about $2,000 on average. Then you can also make money on the financing that your customers get as well. And that could be $200 or $10,000, depending on how big the loan is, et cetera.
Perfect. All right, I've got Bonnie. She's fantastic, and she says in her area it's snowing too. So she's in Oregon. And Bonnie
Bonnie,
and I
I'm
are
sorry. Megan
sticking
will
out
tell you that
together.
whenever I hear it snowing anywhere, I just instinctually laugh. So I'm not laughing at you, I'm laughing with you. It's just snow makes me laugh when it's so nice out here. It's like 80 degrees down here today.
Yeah, Ty and snow don't match, but I love it. So it works out well. Let's see. Bonnie had a good question though. She said, I have filed the EIN number and not the Secretary of State documents yet. Is that an issue? It's not an issue right now. When you go to apply for financing, it's going to be a hurdle. We typically recommend getting all those documents in a row and establishing that credibility that makes lenders feel comfortable. And that's our specialty. That's what is in the business credit building program. Anything you wanted to add to that, Ty?
No, you're killing it.
All right. I have an S Corp for 8 years. Can you help with finding business loans for daily business or buying a building for the business?
Yeah, absolutely. As a matter of fact, we have a new SBA loan program we're doing right now, which is pretty wicked. And what it allows a lot of our clients to do is to buy the property they're in with no money down, and then their payments are staying like about the same as they're even buying the property for. So it's kind of crazy. They go from leasing a building to being in an equity situation where they actually are getting equity in the building by buying it. So we have a lot of different ways we can do that kind of financing. Yes.
Perfect. All right, we've got another good question here. This is from Mark, and it's more of a statement. He's our customer, and he is telling us he's got 17 accounts on Experian and 10 on DMB. So let's just celebrate that success
Good
with him.
job,
That's
Mark. It's
awesome.
27. You should get his last name, and we got to reach out to him too to do a testimonial. Mark, that's awesome, man. Keep it up. Remember, guys, we don't do this. The results aren't ours. Our clients actually take action to get results. And what's nice is if you use our system and our advisors and follow it, you're going to have the results based on what you do. And people like Christine and people like Marlon that you saw both have obtained over $1 million, and Mark here, who's got 27 trades, they're doing it because they have a system that's proven to work, and they're just actually taking the action. But it's not us that accounts for that results with Mark. It's you taking action. So congratulations, man. That's so awesome to hear.
Yeah, definitely. He's ready for that round 4. So Mark, I will reach out to you and have the advisors take you right to that next step where you apply for the Visa and MasterCards without a personal guarantee. We're really excited for you. All right, we have some that want our team to reach out. So I'll reach out to our team members and have them contact you. Don't forget, you can reach out to us. Ty's got our contact information right on a slide that you can see there. We've got another great question. My LLC was established in July of 2018. I feel like, Ty, this is usually how questions come to us. It's like story problems, right? Here we go. LLC established in 2018. I opened one trade line with Uline. I have a DMB number and I'm looking for an office space now. I applied for a business credit card through my bank and it'll take a week to hear back. I'm nervous because they're using the personal credit to guarantee the credit. I need to get Credit Suite to help me establish my business credit. I echo that. We talk with a lot of customers that are exactly in your shoes, Tamika. And I think one of the things that really drove Ty and I to enter into this world and start this business was this desire to really help business owners get financing and do it the right way. We see so many scenarios where it's done incorrectly. So in that scenario, I'm not saying you did it wrong. Applying for the business credit card was a great route to go. We just want to make sure that you're also establishing your business credit so you don't have to use that personal guarantee in most circumstances. So our team can definitely help guide you through that process and make sure that you're getting all the value out of having a business possible. Let's see, we have, can you help a beginner who's an entrepreneur, insurance agent, legal services, get started up with money? I'm new and they need to build business credit. Ty, can we help them out?
Yeah, absolutely. I mean,
Yeah.
look, the nice thing about building business credit is that we don't matter what industry you're in. It doesn't matter if you're a startup. It doesn't matter if you could verify cash flow or have good credit or all these barriers that prevent you from getting loans and credit lines. You see none of that with business credit. It's like I call it a catch-all because everybody can get it and it relieves probably 85% of the expenses you have because, what can't you buy at Amazon? What can't you buy at Walmart? I mean, there's what can't you use vendors that do advertising and SEO for? So yeah, absolutely.
Okay, perfect. All right. When choosing a virtual office through the system, do you get a special monthly rate versus when I go to a company directly?
Yeah, we do. We have a special affiliate program with them. We're really close with Alliance, guys. I mean, their CEO and I have become really close. He's been on my podcast multiple times, and so they give us. I'm not sure of exactly how it works, but like they do several things to give you a discounted rate, and I'm pretty sure even do something with the initial setup fee being waived or stuff like that as well.
George asked a really great question. He said, how does naming a business affect getting funding? This is a fun one. This is something I actually recently posted on LinkedIn, and I have an actual article about this topic. There's certain things like putting a symbol or an ampersand in the business name that can have an impact on your ability to get financing. Underwriting systems just have a hard time with those symbols. It doesn't mean you won't get financing, but it is a little bit of a speed bump. And so it's good to be conscious of that. Putting a high risk industry in the business name is another thing that we run across. If you put that high risk designation in there, that means it's always with you, no matter what kind of industry you select or you're truly in. So I typically recommend sticking with a business name that doesn't scream a high risk or restricted industry right there in your business name. Just remember, there's really cool businesses called Google and Apple that don't uh, define exactly what the business does, doesn't list out the industry right in there, but works with all the various businesses that they execute. Let's see, I'm about to acquire a 15-year-old company that has no corporate credit. Can we help them, Ty?
Absolutely. I mean, what Megan and I typically run into is two scenarios. Somebody's just starting a business, struggling to get financing, and business credit gives them a way to get the financing they're not able to get. And then we find the other side where businesses are scaling and growing. They're trying to get loans and credit lines, and what happens is that they run into a brick wall because their business credit's not established and they're not able to get the financing they need. So we work with a lot of businesses that have been open 5, 10, 15, 20 years that are just now running into issues, realizing they don't have business credit and it's preventing them from getting the capital they need.
Yes, absolutely. How do you feel about shelf corporations?
Oh, I love shelf corporations. Look, guys, the reality is that shelf corporations provide no real benefit because seasoned businesses don't look as good as when there's an ownership change. You have to understand that, lenders, credit issuers, the bureaus, everybody knows about shelf corps. So what happens is when there's an ownership change, right? That's what happens. Somebody else owns a corporation, you buy it, then it automatically throws red flags on the business credit reports. Alerts are put on the business credit reports. There's all kinds of things that take place to tell lenders that something has happened. Lenders then typically look at the bank account start date as the open date of the business. So basically, you just blew thousands of dollars for a business for no reason because they're going to know that what took place with ownership, and they're going to basically season the business based on when you open the bank account anyway. So it's just shelf corps are pointless, guys. They really are. They don't provide any value.
Yeah, I mean, we have lots of customers that come to us that have purchased a shelf corporation. It's always a little hard to share that information with them. So when we can, we like to warn business owners out there. So Joshua, specifically, there are some concerns with shelf corporations as a lender when I would see those, and it's really easy for us to tell it's a drastic change in ownership, business to address, et cetera. I'm going to look at when that drastic change took place, and that's your start date. It just really negates the benefits of that shelf corporation. All right, I'm an owner operator and they need trucks. This is Floyd. I have an EIN number and an LLC. Can you help? Absolutely, Floyd. We'd love to help you work through that scenario and help you get financing. Ty, here's a good question for you. What ranges are the loan amounts? 1,000 to 100 million? Question mark.
Yeah, I mean, it pretty much is that way. Guys, loan amounts fluctuate based on many things. If you're using credit to qualify, it's based on the limits that you currently have on your consumer credit. If you're trying to qualify for financing based on revenue, then it's typically, how high is your revenue, right? That determines how much money you may get. If it's collateral, how much is the value of your collateral? That's going to determine the loan amount. And when it's business credit cards, it really kind of comes down to how many business credit cards you have reporting and how much you're using those cards. Our clients to get $100,000 plus limits with vendors, it's because they're actually really using that credit to grow their business, like a transportation business or whatever it may be. So that kind of gives you, it just fluctuates based on those variables.
Perfect. I love it. All right, we've only got a couple more questions left. So if you have any more questions, go ahead and submit those. I have one. If you live in a small town, should I use a virtual office that's in a bigger city? Typically, there's not a need for that. It's okay to use a business address that's pretty close to your residential address. I have run into scenarios as a banker where the business address was in a drastically different location than the individual, and we had to do some verification to understand why they were so different. So it's okay to have an address in a smaller location. That's not a negative during the underwriting process typically. Let's see, and I'm going to try and decipher this question. Oh, that was Floyd. He was just asking, he's been in business since 2015, one line of business credit with capital. And he's just asking, is that reporting on his business credit reports? I'll tell you from a lender standpoint, and this feels always hypocritical, we always check the business credit reports, but we actually rarely reported a business loan to the business credit report as debt. So it's a double standard. A majority, we're talking over 95% of lenders are checking the business credit reports to make their decision. And some types of financing just don't report. So oftentimes a business may make the assumption they have a well-established business credit report when in reality they haven't worked with the specific lenders that do report. That's yet another way we can add value. We know specifically who does report. All right, let's see what else I've got. Thank you. Ty, just a couple more questions if you have time. Do you have time for a couple
absolutely.
more? Okay. I set up an LLC in 2018, need help getting funding to help it grow. I have a DUNS number and EIN. Can you help? Absolutely, Lee. We can help in that scenario. New businesses, etc., are our bread and butter. We're equipped to help established businesses all the way to startups. And
Yeah, guys,
go ahead.
And what we do basically here is there's two things we do. The first thing we're going to do is we're going to come in and we're going to help you with start building out that business credit profile more, right? I mean, you might have the basic foundation. We're doing the credibility. We're going to help you start getting high limit revolving accounts without the personal guarantee, without the personal credit check. At exactly the same time, we're going to go through and determine your cash flow, your credit, your collateral, which of those may be lendable strengths. And we're going to then introduce all the funding options you may be able to qualify for now as well. If you have one of those strengths, we may have options that work. And then we help you again understand what's needed to graduate to better and better loans. That is exactly how we will help you in that scenario.
All right, Ty, it looks like we have answered a majority of the questions. I see a lot of thank yous all over the board. They love the topics. They're thankful for your time today, Ty. And that looks like all we have on the message boards right now.
So listen, everybody, it's not to say that these aren't the only questions. There might be questions we overlooked. You might be typing them in that we haven't got to. Well, just give us a ring. Like our team, first of all, we love to work with you, but my goal is that you leave here with a bunch of information you didn't have before you came. Like you leave and you go, oh man, I understand this completely different. I can think of 12 things I'm going to do that helps me make more lendable. That's my goal. That's Megan's goal. Okay. And on the other end, we'd love to work with you as clients. Like that would be awesome as clients or even partners getting into the space, making money with business credit and financing, or getting business credit and financing for your business. And let's be realistic, it's cheaper to work with us than not because you're getting, saving $2,000 in credit monitoring alone. Think about it. You're going to spend, you're going to spend $200 a month. So that's going to be $2,400 you're going to spend on credit monitoring. With us, it's less than $300. So you save $2,000 a month on credit monitoring. It's only $2,500 to get started with us. We break it down into payments, not to mention that you get 411 and save the $400 save the Dun and Bradstreet charges. So it's cheaper to work with us, and we're going to cut the process down tremendously to start helping you get money faster, which, because we understand that for small business, that's what it comes down to. The more money you have and the faster you have it, the more cool things you can do with it. And that's like our excitement, is putting the money in your hands and watching you do cool things. Also, don't forget that we will work with you. Don't think that $500 or these payments are too high. Work with us. If you tell us, hey, look, here's my budget, then we've got options that aren't even available on our website. We've got pricing options. We can get you financing. There's so many options we could do. Don't let that be a barrier. Let us have a chance to speak to that. And don't leave here with questions that are unanswered. Okay, our entire team, some of them are standing by now, and all of them will be available in the morning. If you give us a ring at 877-600-2487, that's 877-600-2487, or send us an email, info@creditsuite.com. We will make sure that your questions are answered. We don't expect you just to listen to us for 2 hours and then just spend thousands of dollars. That's ridiculous. We want you to be on the phone with our team so we can actually talk to you one-on-one about your own unique scenario to even see if it's a good fit. Like, don't enroll with us if it's not a good fit. So give us a call, send us an email. Our team, I will even have our team follow up. I will have our team follow up since you've come to the end of this. Just make sure that every question's answered, to get some feedback on how the webinar was and things we could do to improve it next time around. So again, call us, email us, and we'll reach out to you too to make sure that your questions are answered. Megan, any final thoughts before we wrap up?
Hey, just thankful to be here. It's always a joy getting to speak with you and answer questions and hear from everybody in real time. So just grateful for everybody joining us, and thankful for those customers that have shared their success with us. That's why we do what we do, and it's a joy to hear that.
It's awesome. I'm glad you could make it. I have a rule that I never want Megan and I to be in the same place in case of like some kind of nuclear explosion or something. But we were able to be here because like she's still up in Washington and I'm in Florida. We're doing it virtually, so it worked out well. But it is pretty rare to hear Megan and I in one place training at the same time. I don't know if I can think of a time that's actually even happened. So I'm really blessed, Megan, for you as a partner, of course, and the fact that you're here with us. Thanks for carving out the time. It meant a lot.
Thank you, Ty. I appreciate it.
So any other questions we should get to before we wrap up?
No, a lot of the questions that have come in, I've been able to answer them privately. Again, give us a call. A lot of them, I want to dive into more detail. So give our team a call. Whether or not you're ready to buy, they can answer those questions and let you know exactly how we could help. So that's my
All right, so
avatar.
everybody, the website is creditsuite.com/webinar. That is the special link where when you enroll at that page, you get all those specials automatically happen when you enroll. The discounts there, everything is there. That page will be up through Friday at midnight. We do webinars all the time, so hey, you might see it a day after Friday, but typically you're going to see that's taken down, and then people get upset. And it's like, look, we do what we say we're going to do. We don't really discount our price very often at all because we have something truly unique. So we rarely do that. And the second thing is that we don't add a lot of bonuses because, let's be realistic, the value of what we have is there. I don't think to date people say is that it's overpriced, but the value of the bonuses alone is more than what you're paying to enroll by thousands. So you're getting more in thousands of dollars in bonuses than you're even paying to enroll. So I'd love to work with you, and I think that you're going to get really fast results, and you're going to love working with our team. So we're going to answer any questions you have. 877-600-2487, info@creditsuite.com. Visit creditsuite.com/webinar for the special link. And as promised, tomorrow I will send you a playback of the webinar because you went to the end, and I will also make sure that our team follows up with you. So they give you a call, they follow up with email. Just do me a favor and reply to them. Like if they send you an email or give you a call, just reply. I mean, they're not going to harass you. Just tell them, look, I'm not interested. I do have questions. I do have feedback, and that would be awesome. We'd appreciate that. Megan, anything else before we wrap up?
Nope, no new comments coming in. Just thanks everybody for coming.
All right, thanks everybody for taking the time. I know how valuable your time is. So again, our goal, you leave with a ton of info you didn't have when you came. Make sure you visit creditsuite.com/webinar and give us a ring with questions. 877-600-2487. That's 877-600-2487. Thanks everybody. Have a great night.
Take care.